Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review for Friday, December 12th, 2025. Here's the day as a whole, and before we get into it, I want to talk about the daily chart and what we had going into the day. So for the daily chart, if we zoom out a little bit, this is the Globex chart, so we see the 24-hour trading session here. We have sideways market price going mostly sideways, leg down, a few legs up, swings up and down. And in a trading range, we want to buy low and sell high. And if we look here, the most recent structure, we have a spike, pullback, and channel bull trend. But look to the left, ultimately the market is in a trading range. So we're still at a lower high from the all-time high. The market is testing this pivot point, this lower high, this major lower high. So spike and channel, 3 legs up, dueling lines, so 2 legs to a double top. Probably resistance in this area. It's a trading range. Traders are buying at support, selling at resistance. So my expectation for today, going into today, probably sellers above yesterday's high. If we get there, the upside is probably limited because of the market cycle. 3 pushes up. I'm expecting the channel to evolve into a trading range. And just big picture context, I'm expecting there to be more sellers up here at resistance. So I think the bulls are exhausted with 3 legs up, and they'll be willing to buy lower at more value. But here, to pay above average price for average price action, the bulls may run out of steam. And if they cannot sustain momentum, the price can drop quickly. With that said, on the 5-minute chart, there's a gap down going into the day. The structure at the end of yesterday, it's a big spike in channel, bull trend, spike in channel here. We did have a trend line break and a retest of the highs, and you can call this an expanding triangle. We have a high, lower low, higher high, lower low. Expanding triangles can be major trend reversals. Here's the bull trend line I'm referring to. So we have a bull channel. The bull trend line was broken by this bear breakout. The highs were retested here, but now we're breaking above a bull channel line. Lower probability of success. More likely, the breakout fails, reverses into a trading range, or a climactic reversal into an opposite trend. Also, big picture here, it's a trading range. Big up, big down, spike in channel, big up, testing the high of the prior day, and finding resistance there. So we might be developing into a trading range here. The gap down can be thought of as simply a bear breakout bar. A gap and a breakout, a trend bar, it's all the same thing. So you can imagine a bear bar opening at the close of yesterday and closing at the open of bar 1. So bear, breakout, big up, big down at the start of the day. So pullback likely, but also second leg down likely, trapped traders above. Pullback, bear, breakout and follow through 3 and 4, strong enough for a second leg. Second reversal attempt on bar 5, but the gap down still needs a second leg. 3 and 4 still needs a second leg. This is probably a minor reversal, sellers above. Another breakout, bar 7, reversal and follow through 6 and 7. Tight bear channel, breakout on a higher time frame. Any reversal attempt is probably minor and probably lower prices to follow. Nothing to buy here. Weak doji reversal bar. Bar 10, probably sellers above. Now it's becoming climactic. We're approaching yesterday's low, which is a test magnet, probably support there. And 3 consecutive sell climaxes on the open today. That will decrease the probability of a bear trend day. Also, if you take into consideration average daily range, it's been about 80 points recently, and we're already at 50 points. So we've already got more than half of the day's range in the opening range, the first 12 bars of the day. So we may go maybe about 30 points lower, but I suspect ultimately it will be a type of trading range day today. Trend days usually don't have the sell climaxes and then lead to sustained trending behavior. When I see these consecutive sell climaxes, I actually think of this day from one of my studies. November 20th, 2024, consecutive sell climaxes on the open, followed by ultimately a reversal, and it was a trading range day. So when I see this on the open of the day, I'm not expecting a bear trend day, especially to the left, big up, big down. It's all similar to today. Big up, big down, consecutive sell climaxes on the open. Trend day, not likely, but also probably not a huge bull reversal likely as well. So I'm expecting a more bearish trading range day, which means I'm expecting this reversal attempt to be minor, either a leg in a trading range or a bear flag in a bear trend. Also look at the structure. This is a 4-bar bull micro channel. Bull reversal bar with a tail, so implied pullback. Second push up, tail 15, implied pullback. So first push, second push, third push, and then even a fourth push on bar 16. Testing breakout point. Bar 11 broke below the low of bar 10. Also the low of bar 8. So breakout points here being tested in a weak way. Four pushes up against a tight bear channel. Technically a bear breakout. No technical pullbacks along the way until here. So minor reversal likely. Selling here, looking for a test of the lows is a reasonable thing to do. Strong enough rally, it may get a small second leg, but again, it's probably minor, a leg in a trading range or a bear flag. And then trend resumption in a big way. But again, consecutive sell climaxes. 18 is a profit-taking bar. Huge bar, huge profit, but occurring 1, 2, after 3 big legs down, testing below yesterday's low support. Day's range. If the average is about 80, we're at about 71. So there may not be much left to the downside on this day. We've probably seen the high of the day, maybe not seen the low of the day yet, but I do suspect that the bar on the daily chart will be about average. And if that's the case, then there's only about 10 more points to the downside for room for growth. So consecutive sell climaxes on the open, probably bears taking profits down here once they start to lose momentum, which means overlapping bars and bull bars. So trading range far below the EMA, 3 legs down, probably good for profit taking, but really nothing to buy. 24 bull bar, second reverse, closing on its high. Reasonable to take profits if you're short. Aggressive but reasonable buy because you're buying value. 3 legs down, far below the EMA, and a strong bar closing on its high. Did not trigger the buy. Now we have a nested wedge, so 3 big legs down. Expect a minor reversal and trend resumption. Remember, this is a breakout on a higher time frame, but then here, 3 pushes down. This may correct and form a small trading range. Bull bar 27 after 3 legs down, similar to 24. Okay to exit shorts above 27, and aggressive but reasonable bar to buy. Bulls getting consecutive bull bars, breakout, pullback, second leg, testing resistance, but strong enough rally through here for another leg up. So as far as selling, bar 32, double top, low 2, not ideal, probably buyers below. Inside bar, implied pullback, and then another rally. So maybe it's 1, 2, 3, pushes up, suddenly getting one of the biggest bull bars in this sequence of bull bars. It's a little bit climactic, breaking above a bull channel line on the smaller time frame. And approaching resistance, breakout point bar 13 low. 34 is probably a profit-taking bar. The bulls who bought lower will use it to take profits as we approach resistance. Big picture, bear breakout, minor reversal. This will probably get a second leg up, but because of the context it's occurring in, we may get a deep pullback first. Because the bear breakout, the parabolic wedge, is likely to get a second leg down. 36, probably a reset. Leg 1 needs a second leg down, so sell the close. Scale in is reasonable. Remember, strong enough rally for a second leg, so if you're selling here, you know you may have to scale in because the bull breakout needs a second leg of its own. But if you sell and scale in and don't panic, you're probably going to make money because now the bulls have 3 legs up. You can count it different ways. 1, pullback, 2, pullback, 3, or 1, 2, 3. So the upside here probably limited, testing the breakout point. Context says always in short, it's a trading range and we're testing resistance, but the bars say always in long, strong enough bull breakout for a second leg. And yes, this was strong enough for a second leg, but it's much smaller than the rally. Tight trading range after 3 legs up to resistance. So the upside here probably limited. Bulls getting a surprise, bar 45. Bull breakout above a bull channel line. Low probability event to bet on the bull breakout. It's a late leg, it's breaking above a channel line, it's testing resistance. This is a zone of resistance through here. Trapped traders on the bear breakout create resistance. 3 legs up, you expect the channel to evolve into a trading range. You have exhausted bulls from this rally, you have trapped bulls from this sell-off, creating resistance in this area, so I suspect the upside is limited here. Big bull bar but late leg, and a small follow-through bar, tails above, indicating selling into the close of the bar. So the bears may be getting stronger. Reversal and follow-through for the bears, second leg down, likely even if we pull back first. Inside bar 48, but now it's leg 4 or 5. Bear breakout, pullback, gets a second leg, now it's a double bottom, testing support. The bulls have a trend line and the moving average, so 51 outside down, but it's basically 3 legs down. You have a double bottom, 47, 50, breakout below a double bottom, functions as a wedge, so 1, 2, 3 pushes down to support, bull trend line, moving average, so 51 probably a buy the close bar more than a sell the close bar. The bull channel trying to continue, but strong enough. Bear breakout for a second leg down, gets it 54. Now 54, a third leg down, with 47, 51, and 54 testing support. So 54, similar to 51, probably better to buy the close than to sell the close. And if you bought the close 54, you're trapped with the bear breakout getting follow through. So not ideal if you bought, you're probably trapped in this area. And the bear's getting more follow through. You can still view it as a late leg, it's probably going to pull back, but this is strong enough for a second leg down. On the small scale, it's basically a spike in channel, bull trend. The channel had a trend line break, then you expect a test of the highs, and then maybe a lower high, major trend reversal. So selling here, not great, you're selling near support. bar 37 low, leg 3, nested leg 3. So there's probably going to be a bounce here to resistance. A couple of legs to the moving average. Maybe there's others here, but it's so minor. It's a tight trading range at this point. You wonder if the bulls will get a deeper pullback than that before the bears get a second leg down. You can count 3 legs up at this point, 4 legs up, bar 68, probably a sell to close bar, late leg at resistance, second leg down likely, so more of a sell to close bar there, 69 reversal bar, and follow through, 70, reversal follow through, second leg down likely. So a reset of the leg count to a degree. Of course, this might be leg 1, complex pullback, leg 2, but through here, it's the strongest reversal attempt. Through here, it's probably a reset, again, to a degree, meaning this reversal and follow through, 69.70, may pull back and then probably will get a second leg down, similar in size. So there's your pullback and second leg. Now you have a nested 2 legs down, testing support. So the downside here might be limited as we've evolved into a trading range. So bears getting their bigger second leg, but testing support. Bad signal bar 29, which trapped traders below, becomes support. Traders sell above that bar, they get trapped on the bull breakout. Some exit here, producing the second leg. Others hold on to the trade. Remember, they sold down here, scaled in. When the market comes back down to their entry price, they're going to exit at their original entry at break even and with profit on their higher entries. So the bears start buying here. The bulls are always buying. They're buying at support in the trading range. So I suspect this will become support. And you can see the structure through here. Leg 1, pullback, leg 2, leg 1, pullback, leg 2, leg 1, pullback, leg 2. So a lot of ways to see 2 legs down to support in a trading range, which to me means the downside is probably limited. And then climactic reversal, big down, big up. Late in the day, strong enough for a second leg, but it's late in the day, so you can probably buy, scale in, and get a second leg up and make money. But it's just too late in the day for me to take any trades at this point. And the bulls got their breakout, pullback, second leg. And a fairly symmetrical leg 1 equals leg 2. Alright, that's going to be it for today's end of day review. So thanks everybody for watching, and I hope you have a great weekend.